Welcome to the CPA Advisory Show. I'm your host, Jeremy Wells, CPA, and with me as always is my co-host, Chris Hervishon. How you doing, Chris?
Doing great, Jeremy. How are you?
I am doing fantastic, and I am super excited about this episode today. We have a guest that among probably most of our listeners, if not all of them, will need no introduction, especially among the accounting community, but also among the broader, what he and his co-host refer to as the knowledge economy. Of course, I'm talking about Ed Kless, co-host of the Soul of Enterprise. It's a pleasure to introduce Ed Kless to the show. Ed, thanks so much for your time and welcome to the show.
My honor and pleasure, Jeremy. Chris, good to see you too.
Likewise. Looking forward to this. So first question, and I know that like one of the episodes that I love listening to, the Soul of Enterprise, at the end of the year when you go through your reading list for the year. So I want to get it started this way. But for a firm owner who's either just getting started or is thinking about throwing out their timesheets, what books would you recommend that they start reading?
Well, I have to go immediately to my friend and co-host, Ron Baker, and his book, Implementing Value Pricing. That would be number one on the list. And I would say this, even better if you want to jump the curve a little bit and get involved in what we now talk about which is Value Pricing 2.0, which is subscription-based pricing. His book is due out December 8th, I believe, and that it's called Time's Up. You can certainly get pre-order that on Amazon and even join our pre-order community that we have. So if you go to the soulofenterprise.com/Time's Up, there's instructions on how to do that. Get you some bonus stuff as well as the pre-ordered book. But passing on then Ron's work, I will move to some stuff that I think is important from more of a conceptual basis, and that would be to read Mahan Khalsa's book, Let's Get Real or Let's Not Play, which in my view is the best sales book ever written about consulting, or the best consulting book ever written about sales, however you want to talk about it. Because I think that what Mahan taught me and continues to teach me, despite the fact that he's been retired in Hawaii for 10 years, is the importance of the value conversation. And perhaps we can jump into that a little bit if you want to talk about the details of that. So his book, Let's Get Real. But then also I would be neglectful if I didn't mention another work that is extraordinarily important and influential in my career, which is Peter Block's book called The Answer to How is Yes. The answer to how is yes. And one of the things that Peter has taught me and continues to teach me is that the questions that we ask are extraordinarily important, and inclusive in that is the order in which we ask them. And I don't mean, write them down 1, 2, 3, 4. I just mean that we have to make sure that we get clarification around what matters and what's important before we go into the details of how are we going to do things. And I think one of the problems that consultants face, and I include CPAs in a very broad coalition of consultants because they're consulting on the tax code, how do you run businesses, and that kind of stuff, is that we tend to answer the how-based questions that prospects and customers ask us too early in the process. And this causes a problem for the professional as well as the prospect or customer. We ask about it too early, so we can go down that path if you want to explore some of those ideas as well. But those would be the three out of the chute that I would recommend that you have. And Ron's work on pricing, the work on the value conversation, and then also the notion of just understanding question asking in more general terms, which is what Block is about.
Okay, well, while we're there, how early is too early to start with the how?
It's a little bit of a gut feel, but I can tell you this is that unless you feel that you've completely explored the what matters piece, then you're too early. Let me give you an example. So one of the questions, and Block narrows it down to about 6. I won't go through all of them, but one of the questions that he says is asked and answered too early is one that I think is pretty relevant to accountants, and that is this notion of how have other people done this successfully, right? How have others done this? It's actually called if you think about it, it's a reference question. Can you give me a reference? you've done some specialty work in this area. Can you give me a reference for somebody who, by the way, is exactly like me and is in a 50-mile radius of where we are? Like, well, that would just be you. Um, so this reference questions, how have others done it successfully? It's not that any of these how questions are bad. It's just that they are ill-timed, because if you try to answer that, if that question is asked and answered too early, it blocks any ability for us to develop something new. So if somebody is, how have other people done this successfully? Picture if the Wright brothers had asked that of each other on their way from Dayton, Ohio to Kitty Hawk. Well, Wilbur, how have other people done this powered man flight thing successfully? Well, Orville, I've been doing some research at the Dayton Library and came across this Icarus Daedalus thing with, the wax and the wings and crash into the river. That kind of sucked. And then Leonardo da Vinci, perhaps the greatest human mind that has ever existed, designed no less than 4 different flying machines, none of which get off the ground. Well, actually, one of them gets off the ground, the heliocopter, which kind of like hops up and down until it destroys itself on the launching pad. You're right, Orville, the hell with it. Let's go back to the bicycle shop. Right? So, because if you ask and try to answer that, how have others done it successfully, you completely block the possibility of innovation. So, blocks what matters question. The corresponding what matters question is, what do we want to create? And we need to fully understand what is it that we want to create together. Now, in project management, that exact question is called scope. Right? That is the scope question. So we have to answer that scope question first. What is it that we want the output, or better yet, and we can talk about this too, the outcome to be? And let's get an understanding of what that outcome needs to be. And then we can begin to talk about all of these other things that come after that. Because if the Wright brothers had asked that question of each other, there would be no flying machine, right? But because what they did is they did ask themselves a variation of the what matters question. What do we want to create? And it was a flying machine. And then it changed the nature of the question to, what can we learn from others who have attempted this, including Icarus and Daedalus and Leonardo da Vinci, but also another species, i.e. birds. And what they did was they observed birds, and that's where they came up with the idea for the wing that you could control and manipulate to change what ultimately was lift. Now, keep in mind that Wilbur and Orville, neither one of them, I think, had a high school diploma. So, they weren't engineers. They were bicycle shop owners, right? But they had this practical and idea that they wanted to share with the world. So, the answer to the question is, when do you know you're too early, is you have to feel, have you completely asked and answered the what matters questions to their fullest extent? I mean, and maybe it's 80%. Once you're 80% there, okay, now you can move and get to the more practical stuff.
Well, let's take a step back for a minute, because I see a lot of new and even a lot of seasoned, unfortunately, accountants. And this would be true of the broader professional services industry, but I especially see this among accountants, because that's the community we're mostly interacting with, of where they put themselves in a position of really just being order takers, right? And so I'll see them go into online communities with other accountants, and they'll pose questions that start off with, a client came to me and said, I want to qualify for this kind of deduction or credit, or I want to start a new business, and therefore I want you to create the LLC for me, and I want you to set up the books for me, and all this kind of stuff, right? And so it's almost like a fast food kind of situation, right? Like they came to me, they ordered off the menu, and here are the things I need to do. And so now I'm just asking the community for help on, what's the technically correct way to do this, or what's the most efficient way to do this, or what's the software du jour to get this done, right? For someone in that mindset, right, where they see their job as taking orders from clients and facilitating what the client is saying they need done, where do you start, right? Like, assuming someone has never even heard of having a value conversation or value pricing, right? These are relatively advanced concepts, it seems like, for a lot of these people in that mindset. Where do you start to transition your own mentality as a professional services provider away from order taker toward advisor, consultant, whatever we want to label these different ways of helping clients?
The first thing that you have to change your own language. You have to change your language and stop thinking of yourself as a supplicant, someone who has to come in and do the bidding of whatever pair of legs walks in the door. Or whoever calls you. I mean, this gets to something I think is crucial, and that is understanding that you as a provider, unless you've really got your marketing down, in other words, your marketing really to your specific niche, should probably say no twice as much as you say yes to people walking in the door. And you should be saying no to them.
Is the number that high? Twice as
Yeah.
much?
I mean, unless you're really good at your marketing, like, if you know that you're going after breweries, and that's what your niche market is, then you probably, that number is not the case. But the problem, Jeremy, I think you're talking about is the generalist who gets approached by all of these different angles, and they say yes because the customer can has a checkbook and can fog a mirror. And therefore they're a good customer. And even if they can't fog a mirror, they're looking to get the estate work. So
yeah, I see a lot of accountants in these same groups that one minute they're asking about how to do something on a 1040, and the next minute they're asking about how to do something on a business return, and the next minute they've got an estate and trust question.
Well, and this gets to something that's a very serious problem. This is a very serious problem. One of the canons of the in the profession, I know it's part of the AICPA stuff. So even if you're not a member, is do care, right? Do you have the capability to do this work? Do you have and more importantly, the knowledge? And that's where I also wanted to go with this. Is stop. I do not use the term professional service firm anymore. I use it, but only to say that it's wrong, that we shouldn't be calling because we don't sell service. We sell transfer of or access to knowledge. That's what people in the accounting profession sell. They don't sell service. Service companies, McDonald's is a service company. They sell fast food. The airlines are service companies. Hotels are service companies. Federal Express is a service company. They sell a service. But what accountants do is they sell knowledge. They sell access to or transfer of knowledge. And the reason why I say access to or transfer of is that's one of the crucial questions that I think a provider has to discern for themselves is which do they want to provide, or is it a combination of both? And what do I mean by that? Some folks, some customers just want access to your brain. They just want access to what you have, the knowledge that you have, and they don't want to do anything. And that's fine. And that's one strategy that you can pursue. But another is to say, well, some people want transfer. They want you to share with them how they want to know how to do it. They want to learn from you. And those are two different skill sets, either being a repository of knowledge or transferring the knowledge to someone else. Now, I think most accountants, not all, but most accountants and bookkeepers fall into I'm just going to provide access. I'm not going to be teachers. But I do talk to a fair amount of people, especially in the software provider space, who say, no, my specialty is, they call it training. I don't like that word either. That's another word you should change. It should be called education, because horses and dogs are trained. We potty train. Adult human beings need to be educated. And by the way, from a marketing standpoint, which can you charge more for? Training or education? Right? I mean, it's just clearly the better word. So the answer to your question, Jeremy, is look at the language that you're using and begin to change the language. One of my heroes, and I have a lot of heroes. One of my heroes is Werner Erhard. I don't know if you probably have heard that name, but Werner Erhard is a weird dude. Did either one of you watch The Americans, the series The Americans? No? Okay. So Werner Erhard founded this thing called EST, E-S-T, Erhard Seminar Training. It was very big in the late 70s and early 80s. And it was a lot of this self-actualization crap, blah, 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 blah. But Earhart has some pretty interesting things. By the way, he's one of the reasons why he's one of my heroes has nothing to do with that. Is because he actually beat the IRS in a tax case. He went up against the IRS and won. So he's a hero of mine just for that. But he said all transformation is linguistic. If you want to change anything, if you want to change the culture, you need to change the language first. So there's lots of little language shifts that you will hear people like Ron and myself talk about. And for example, we don't use the term client, we use customer. We don't say service, we say knowledge. We don't say training, we say education. There's a whole big list of these where what we're trying to do is try to teach people, no, you've got to change the language. And it's your own language.
That's one of the ones I've been
curious
about for a little while. Why do you use customer instead of client?
So this is a long form podcast, so I can tell the whole story. This is great. So I don't have to give. There's a very quick answer, but I know it's more fun if you hear the whole story. So the whole story is this. Oh, yeah. Did you guys see My Big Fat Greek Wedding? Remember that movie? Oh, yeah. Okay. So you both said that good. And there was kind of two running gags in that movie. There was the thing with the Windex, right? The dad would spray Windex on everything. And then the other one is that he had this running thing that I said 2 or 3 times throughout the movie is like, give me a word, then I'll tell you the origin is Greek, and, they throw words at him and he comes up with this convoluted way that the word orange is actually Greek. So he's like, so that's the gist of it. Well, it was like that in my house growing up, except not Greek, was Latin. My dad was a part-time Latin teacher. So we would have these conversations about the origin of words, the etymologies of words. I'll always remember when we talked about the word mortgage, which is a concatenation of 2 Latin words, mort, which everybody knows, death. Gage, not many people understand that one. That means pledge. So a mortgage is a death pledge. Makes total sense now. Right? It's like, it makes complete sense. All right. So the word client is of Latin origin as well. And it started, and the concept goes back to ancient Rome, when the lawyers of ancient Rome had clients. And it was more like there was no such thing as billable hours back in ancient Rome. Like, so if you had to go into the court system and you were a Roman citizen, you were appointed a lawyer, whether you are plaintiff or whether you were a defendant. And of course they didn't call it that, but regardless of who, if you were a Roman citizen, you had by law, one of the lawyers in ancient Rome had to represent you at no charge. It was the way that they would, that part of their social responsibility. By the way, in the Bible, Jesus does not get a lawyer, but Paul does, because Paul, when he's brought before court, is a Roman citizen. So he's represented by a lawyer. Anyway, but the people that these lawyers served were the clientele. And the word client literally means one who leans. They're leaners. And they're leaners because they, did something wrong, like, have too much to drink at the Bacchus festival and had to, be represented. And they had to be propped and fixed. In fact, the word comes down to us in a couple different formats in other English words. We see the nature reflected. Incline, decline, recline. They all have this idea of something that's not straight but leaning, right? Incline, decline, recline, right? That clientele. So it's one who leans. So, and it was a very much patron benefactor relationship. It was very much like social workers today have clients, right? And they need to be fixed. They need to be propped up. And look, this might have been for a long time the nature of the relationship with clients. One of my other big jokes is that the biggest shift in accounting technology has been the move away from the shoebox and toward the Ziploc bag, right? Because instead of the shoebox of receipts, you now get a Ziploc bags full of receipts, right? That's a bit with the So that's a big, technology shift for accountants. But you had to fix it. You had to fix this mess. And it was a once a year or once a quarter process of fixing it. Well, the problem is that's not the nature of the relationship that I think modern accounting professionals want to have. They want to have one where it is instead a customer relationship. The word customer is Anglo-Saxon in origin, and it means obviously one whose custom it is. When you came into town, it was their custom to come into the store, right? So it was their custom. So we want it to be their custom. Now, I'm using the word customer, but I think and this gets to some other language shifts in the subscription world, I actually think the better word for what we want to use is member. And what you're creating now is a club. I don't know if you remember, American Express way back had this great ad campaign. Membership has its privileges. And I want accounting professionals to think of their customer base as, or their membership base, even better, as this a group of members who have some stuff in common beside the fact that they need a 1040 on April 15th. So what is it that you can do to create a community, a membership community that's above and beyond just providing a 1040 once every 12 months? And I think that the better off that you can be at creating and carving out that community. And by the way, it doesn't have to be the standard, demographic stuff. Oh, I'm only going to serve dry cleaners. It can be. I mean, I think that there's certain for industry or detailed niching. I think that's great, but it can be more psychographic. It can be more people who want to spend more time at the beach. But something that creates community above and beyond just the nature of what it is that you're providing.
That's interesting, because I think that ties back to the nature of beyond just value pricing, but seeing ourselves as part of value generators, right, with our clients, customers, members, whatever we're calling them, right? Because I've seen this put a few different ways, but one that I like is don't sell the work you're doing, but sell the result, right, that you're trying to generate. And so if you're thinking about that in terms of your addressable market or a potential client base, whatever you want to call that, right, like instead of defining that in terms of, like you're saying, a particular demographic or a particular industry, this is a big question, right? Is we're told niche, right? Pick your niche, or right. And so, okay, well, where do I start, right? And so I think an easy way for accountants, especially small business advisors, think in terms of an industry, right? Well, if I get to know this industry, you mentioned breweries, a dry cleaner, right? If I get to know that industry really well, then I know how the bookkeeping for a dry cleaner works. Therefore, I should just have 50 dry cleaners as clients. That'll make me a better advisor. But I like that approach of I'm working with this group to try to create this shared result for them, right? Or this common result, whether they're dry cleaners or real estate investors or whatever, right? They're all working toward the same goal. And so maybe it's not so much about the work that I'm doing, but rather that sort of shared sense of we're working toward this mutual or shared goal together, right? I think there's just so many different ways that you can push beyond just this. I'm a tax preparer, or I'm a bookkeeper, or whatever kind of pigeonhole we put ourselves into professionally.
I have and this friend of mine is more of a technology provider, but I think it could apply to accounting. And he says he developed a high area of specialization in companies that were going through a transition, a familial transition in the business. So generation A to generation B. And that the fact that takes, anywhere between, 1 and 10 years to make that. And he got really good at helping those specific businesses. That's a great example of not a demographic, but a psychographic, right? To say that here's what we specialize in. And we might even recognize that you're only going to have a relationship with us for the period of the transition. And that you're better off being served by somebody else who's a specialist in your area. But what we're really good at doing is helping you get from, dad to daughter. And making that transition happen.
Now let's pull this back again and get a little technical, right? For those that haven't quite, wrapped their minds around this kind of business transformation or firm transformation, right? Okay, so when we start thinking about, pushing toward these results or more value-based ways of thinking about helping clients, I think one of the natural places that a lot of accountants and other professional service providers will go is they immediately start thinking about, now, you talk about, you bring up scope, right? Now everything, it seems within scope, right? Because, I'm always
Mm-hmm.
fielding questions from clients and telling them, well, that's actually more of a legal question, or that's more of an insurance question, or that's more of a retirement planning question. And so these are things that for
Mm-hmm.
me and my license are out of scope, and I can refer you to somebody that I know, but I can't really do that inside my own firm. If we start saying that we're going to guarantee these results, it seems like we're bringing a lot of things in scope that may not necessarily be within our ability to provide. So, how do we build our firms, and how do we plan for staffing and capacity and all these kinds of things when we start shifting more toward results and value generation
That's a
for our
good
clients as
question.
opposed to just doing services?
So the language shift that I would suggest here is think of what you have in your firm and what covered versus not covered. Instead of in scope and out of scope, think covered and not covered. And we're borrowing this language. Ron and I have, although he way more than me, have studied what's called the DPC model, the direct primary care model, which is these physicians who are really, I think, on the cutting edge of a business model transformation in the medical profession, and that they are selling subscriptions. And it's an end around the entirety of the insurance thing, which I think is great, because I think this is a truly wonderful market innovation. But what they do is they say this they're general practitioners, so they say this is what's covered. One of our favorites is this guy, Dr. Paul Thomas. He's out of South Detroit, and if you go to his website, which is Plum Health DPC, you'll see this is the list of stuff that's covered. Dr. Paul doesn't say that if you have cancer, I'm going to cure you, because that's not what's covered. Now, he does say if he can stitch you up if you've got a problem. He does have an x-ray machine. So a lot of the things that in many cases would be emergency room visits, he says, no, you don't need to go to the emergency room. You can come to me because you're covered for that stuff. But then the stuff that he doesn't do, he says, yes, I will be to use a US phrase, the quarterback of this, the project manager, the engagement manager on this. And I will go out and assist you in getting relationships with the specialists that you need. But I will remain involved in that process to some extent, even if it's just to check in and make sure that it's happening and going in the right direction. And because there's, I think, a huge value in that. I mean, that's one of the big problems in the medical profession. I don't know if you have had loved ones. This has happened with some family members of mine, where they as they get older, they start to go to more and more of these different doctor appointments, and every single doctor thinks they're in control. And there's no one who's saying, well, this guy's prescribed you this, and this one's prescribed you this, and those coming together is probably not a great thing. No, there's no provision against it, but the FDA doesn't test at all. Zero. Do they do any testing for this medication and that medication the same? Zero. It's all, oh my God, that was bad. That's right. So we really need to get somebody who is who understands the well-being, the holistic, another word for it is the integrity, the full integrity of the person, of the situation. So when you ask the question about staffing and all that stuff, well, where do we draw our box? What is it that we cover? And we say this is what we cover. Now, will we constantly be adding to the things that we cover over time? Yeah, probably. Like we might begin to add financial planning, or especially, and this is one I just thought of about, I don't know, 6 months ago. I was on a podcast with somebody, and this idea came to me, and I've talked about this ever since. People are like, yeah, that's a great idea. If you're doing individual tax returns, you've got the names and birthdays of every single one of your, I'll go with customers' kids, right? Wouldn't be hard to throw all that into some kind of database and say to the ones that are approaching it, I see that your kid's 17. Is there college plans involved? Do you want me involved in the filling out of the financial aid stuff for you? Do you want me to take that over? And why not? Right? So I might add that as a service that is now covered. Financial planning for, kids who are going away to college. That kind of thing. I'm just giving an example. Maybe not. Maybe that's not something that you're interested in. But the point being is that we would be constantly adding to the things that we do cover. But as you said, Jeremy, going out, look, hey, listen, if I need to go and we need to get work on an insurance plan, that's not me. I'll happy to have a broker for you and maybe contact 3 people, manage it, but I'm not going to do it.
I think in our space, one of the things that we've seen and what we've been thinking about is HR. Bringing an HR person into the firm potentially, or at least finding somebody to partner with, because, we're dealing with small business and they're not going to have an HR person in-house. We're doing payroll and some of those things blending together. We've got virtual workforces now, which are all over the place, and those come with different HR type issues. And so, it seems to make sense.
Isn't this what like Administaff had done for years, right? I think it was called Administaff, was a company. I don't know if they're still around, but yeah. But yeah, that outsourced HR stuff at a particular level. And Chris, what you might want to say is, as long as you are under 30, I think, isn't there a big, like, there's a federal jump at once you get from 30 to 31 employees, the federal government, is much more intrusive, shall we say, in the business. So you might want to say, okay, as long as when you remain under 30 employees, we can handle it. If not, then you got to go elsewhere. But that's the kind of question and continued niching that I think is important for you to do, to say this, we can handle this, but we can't handle that.
So as far as the value pricing conversation, what are the key components of that? So one is developing what are the pain points and exploring that whole space, right, kind of on the front end. But what are the rest of the components that people should be thinking about?
And again, another language shift. I don't like pain points.
Okay.
I don't like.
So what do you like?
Really the first part of the value conversation is first of all being a really good listener, and being able to listen intently and making sure that you're not answering a how-based question too early in the process. And the way that happens is by listening. But so let's just say, yes, you've upped your listening skill and have gotten good at focusing on the conversation at hand. Usually what I find, one of the initial questions that is proposed by let's call it a prospect at this point, is some kind of a technical problem, some kind of a technical issue that they have, some kind of a thing that they want an answer to. Can you help me solve this problem? Right? And the reaction that most professionals give is to go into the details of how they would go about solving that problem. Because, and I believe this is true of all of us on this podcast, and certainly maybe a lot of you listening, I actually want to start a group called Solutionists Anonymous. We are all solutionists. We like to provide solutions to people. It makes us feel really good. We get an adrenaline hit when we answer somebody's question and we think, I am so smart. How great is this? They think I'm really smart. And it gives you an adrenaline hit for doing this. The problem is that it's too early in the process to be talking about solutions. So the first thing that what you really need to do is you need to, what Mahan Khalsa in his book, Let's Get Real, Let's Not Play, talks about, is move off the solution. Move off the solution. Let me give you an example. And then if you want, you guys can throw examples at me and I'll move off the solution. So you play Stump the Chump after this. Okay. So, but here's the example from my career. My long time ago, I used to sell ERP systems, and I was doing this demo, which went on forever. It was like hours. And the guy, about hour 6 of the demo, this dude, his name was Evan. He stands up and he says, "Ed, stop. He says, this is great and all, but you know what? I kind of assumed that an accounting system could print an accounts payable check. You really don't have to show me that. I assumed it could do that." Right? He says, here's what I need. I need a report that shows me inventory turns by item category. Can your system do that? And I went into my, brain and thought about, okay, there's an inventory report, physical inventory report. Does it do it? No, it doesn't sort by item category, but I'm really good at this thing. This is actually an old technology. It might be still around. It was called Crystal Reports. It was this great way to get data out of different disparate systems. So I decided, okay, you know what I'm going to do? I'm going to create a Crystal Report live and on the fly during this demo that will do this. Now, everybody, when I start the story, they're like, oh, it's never good to do something that you don't know. No, the problem was I was extraordinarily competent, and I did it. I mean, I was like, bang, 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 and I'm making it red, white, and blue because it was around Independence Day, and I'm like, okay, is this what you need? And he's like, yep, that's it. Right? We get this deal. It was a $60,000 deal, $30,000 in software, $30,000 in consulting. And I'm thinking I'm a genius. Well, 6 months later, I'm probably out at their site aligning their accounts payable check because it didn't match up on the dot matrix printer properly. And Evan throws his arm around me and he says, Ed, you know that report you gave us? I'm like, what are you talking about, Evan? He says, the report you gave us. Remember, because I had to give it to him. I was still billing by the hour at the time. I couldn't put it on the timesheet. I did it during the demo. Mm-hmm. He says, the report you gave us, yeah, we've been able to figure out that because we've had this information, that we've been able to increase our sales this year by 40% at same cost structure. And I'm like, they were about a $10 million company, so they're on a run rate for 14. How much was that report worth to him? $4 million. And what did I get? Zero. Well, 60,000. All right. So, or 30,000 in consulting, however you want to look at it. Right. And that was one of the seminal moments in my career. I said, this just doesn't make any sense. Like this makes no sense at all. I got no beef with them making more money. That's great. But, come on, man, show me some love. Right. So when I came across the work of Mahan Khalsa, what he taught me is I did the wrong thing. I was a solutionist in the moment. Instead of saying, Evan, let me show you how to do it, here's what I should have said. And this is the second part after listening. This is the second part of the value conversation. Evan, thanks for asking. We do custom reports like that all the time. However, what we found is that oftentimes people can get information different ways and don't require a customization, which is a true statement, by the way. Would it be okay, Evan, if I asked you a couple of questions as to why you think you need this report? Now, what's Evan going to say? What's Evan and 99 out of 100 normal human beings going to say in response to that question?
Yeah, sure.
Sure. No problem. So then, all right, so now I have pivoted. I have moved off the solution. I'm no longer talking about the solution to the problem. I'm now actually talking about the problem and the potential value of the problem. So why do you think you need this report? So now, but notice, and this is an important point, I asked permission first to ask the question. So would it be okay if I asked you some questions as to why you think you need this? I got the affirmative response, yes, you can ask me that. Okay, why do you think you need it? Or phrased slightly different so that it doesn't sound too rote. Evan, what is the evidence that you have that this is a problem? What's the evidence that you have? And he might, and he would come up with something. He would come up with something like, we breakage. There was some, like, we don't know this stuff. We had stuff that would break in the manufacturing process. Okay. And then now I start to go down to what are called Mahan's 5 golden questions, which is, how do you measure it? How do you measure that thing? What is it now? What's the value of it now? What do you think it should be? What is the difference between those two over some period of time? A year, 6 months, whatever period of time they went. So if I have this conversation with Evan about this, I can find out that this breakage is costing him X. How many times is it a problem? Well, we have to short ship and the customer gets angry. We think we end up losing X number of customers a year over it, blah, 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 blah. Oh my gosh, really? So you think like would we have come up with $4 million in that conversation? Probably not. But we would have come up with $1 million.
More than 60,000.
Yeah, more than 60,000. Yep. And then had I put a fixed price on it of not 60, but $100,000. So I'm not saying that I would have charged $1 million for it. That's not what I'm saying at all. But I put a fixed price of it of 100,000. They still go for it. And where does the additional $40,000 difference go?
In your pocket.
My bottom line, because I didn't change the cost to serve. Right? So this is the great insight, is understanding that unless we have, and here's the thing, accounting professionals should be good at this line of questioning.
One thing I noticed about that line of questioning as you were going through it, they all started with what or how.
Yeah.
Why is that?
Yep. Because we do make this shift. So what we're doing is how do you measure it? So what is the measurement system? What is the thing that you're measuring? And then what we have to understand is, okay, well, if you're measuring this way, errors per thousand, breakage, something like that. All right, well, then I now have to shift to, all right, what is it now? What's the value of that thing now? Right? Then I have to get an understanding of what the belief will be, and then it's just a simple mathematics problem, subtraction, to say this is what it should be, this is what it is, this is what it's worth, and then again over some period of time. So it's a framework, it's a methodology to get to that value. And look, I just gave a very simple example here. It can be challenging because you might get some pushback and resistance from the prospect or customer about it, most often because they don't fully understand it either. But isn't that your job? I mean, this is where you jump in. Well, you are the expert. Mm-hmm. All right. This should be the thing you're really good at, helping them make a good decision financially about whether or not doing something about this problem should be done. And here's the thing. One of the beauties of this is, well, say I have this conversation. It turns out it's not. There's not a lot of value behind it. And I say, well, you know what? Maybe we should just move on. Maybe we shouldn't solve this problem. Well, they still like you.
Yeah.
And I think a lot of accountants are worried that, to use your example, right? Maybe if you went down that line of questioning, you would eventually reach a point to where they would realize that the whole reason you were there won't even solve any relevant problem, right? And so it's not that you could have made 100, but you only made 60. It's that you didn't even sell the 60. Right. I think a lot of accountants, we get prospects that are coming to us thinking they just need a tax return. And we realize, oh, no, you need a lot more than that. You need the books, you need the payroll, you need the entity selection, you need the advising on capacity plan, all this kind of stuff. Right. And, we move into that solution space, and it's either one of two results. It's either that becomes way more than the client ever expected to spend. And so they don't, commit to anything because they just asked for a tax return. Right. And so we kind of fall back on, I don't want to overwhelm them, right? And so I'll just sell the tax return, and then hopefully 6 months from now or a year from now, I can upsell them on some bookkeeping or some payroll, right? And
well, see, here's a radical idea, marketing idea. It's like if look, and Ron is even more adamant about this than I am. He's like, if you're a CPA, if you have your full designation CPA, and all you're doing is tax returns, you're in the wrong profession. Yeah. Okay. He says, you're doing it wrong. I mean, unfortunately, this is a vast majority of the. He says, if you got a situation where they think they're coming and all they need, we only need a tax return. I'm not your firm. Go to H&R Block. Check in with me in a year, or after you have that conversation with them, and it turns out that you don't just need a tax return, you need more than a tax return, then come back to me. But if you just need a tax return, that's not me. And which I think one of the things I think is real important, establish some kind of minimum price, right? And I think there's no shame in this. Unless it's $12,000 a year or $1,000 a month, if you want to talk about subscription, we're the wrong firm.
Yeah.
I think a lot of the problems that we're having in the profession right now are downstream of that. We've been charging not enough for way too long.
$300 for a return. That should have been.
Or less.
Yeah. Right.
Yeah. Or less. And then because of that, we can't pay people enough. And because of that, we don't get the pipeline and yada, yada, yada. And it creates, where we are now.
Yeah. No, it's not good. I mean, and look, a little open kimono here. I don't have a CPA. I use TurboTax. Been using TurboTax for 10 years. You know why? Because my accountant that I did have drove me insane by sending me the stupid tax planning binder that if I could fill that crap out, I would be able to do the tax return.
Now, is that okay? So let's break that down a little bit, right? Because I think one of the issues then is accountants get so in the weeds of we're the accountant, we need to help our clients, that they don't think about the client end of the relationship, right? Like it's hard to have that.
Mhm.
I almost used the word empathy. I just read your blog post a little while ago about compassion versus empathy, so I stopped myself.
Another word I
Right?
don't like.
Exactly,
See,
exactly. So let's have some compassion on the client, right? And think about this,
Mhm.
right? Because I think just the same way we can get into ruts in the way we run our firms and practices, clients can get into the rut of I just go back to my tax guy or tax gal, right? Every year they do a great job, right? It's always a good price, and I always they've always got coffee and Danish when I go to pick up my tax return, so it's always a fun experience. And I bring the kids, and they've started doing the kids returns because they're working out, right? Like, how do we, from the client side of things, how do we say, look, we're just it's this is not, we need to move a different direction, and so we just got to cut
Mhm.
you off, right? Like, how do you get over that point of the desire to help the client, every client, and even the ones that have been with you that you built your firm on, right? If it weren't for them, you wouldn't be here today. And then say, but that's not what we're
Mm.
supposed to be doing anymore.
But are they really helping you at this point, or are they holding you back from doing other things? And look, I have a very I'll give you the flip answer first, which is I go to accounting, trade show, AICPA, Engage, all this stuff. And one of the most common things, you're sitting around the cocktail hour, sipping a glass of red wine, and I'll say, how's it going? How's your business going? And one of the responses I get about half the time is, "Oh, busy. I'm so busy, so busy." And here's my response: increase your price. And they're like, "What do you mean?" I said, "Well, increase your price." I said, "In fact, if you're really busy, my first recommendation is double it for everyone." And they're like, "Well, what if I double my price?" I said, "Are half of the people going to leave if you double your price?" No. All right, so you're the accountant. Do the math on this. You you doubled your price, and yes, a certain percentage of them are going to leave. What percentage? And this is a Mahan Khalsa question. What percentage are going to leave? How many do you think are going to leave? 10%, 20%, 30%? I think about a quarter of them would leave. Okay, so I'm just telling you that in doubling your price, what's going to happen is you're going to make twice as much and only work 75% as much. Help me with the downside.
Well, and then also the downstream effects of that too, right? Because now, instead of wasting time trying to find this elusive new tax senior or tax manager that you can't seem to find because we've got a shortage of qualified applicants, right?
Yeah.
And so not only have you boosted your top line, but you've also kept yourself from having to increase your overhead. Right. And to me, that's just a leaner, better business. I think one of the problems with a lot of accountants is we're great at being accountants. We're terrible business owners.
Well, but so that's the flip answer. Let me give you the I think the better answer. The better answer is do what my friend Dan Morris did, who's another fellow at the VeraSage Institute, in fact, co-founder. Create a separate brand. He created a separate brand called Express Tax. He put an enrolled agent in charge of it, and the people who only needed 1040s were sent to Express Tax. And then that's Express Tax. Now, every once in a while, there's crossover. There's people who come back to Morrison D'Angelo, which is the main accounting firm, because they need more than just a tax return. But if you just need a tax return, it's not served by accounting firm brand. It's served by Express Tax brand. And the reason for that is that you can't be McDonald's and Ruth's Chris. Customers are going to be disappointed if you try to be both. Because if you're walking in thinking you're going to pay McDonald's prices at Ruth's Chris, that's not happening. And if you're walking into Ruth's Chris thinking that you're just going to get a hamburger and fries, you're not happy.
Yeah.
Right? So, I mean, what a brand can only stand for one thing. And I think what the problem is that accountants want their brand to stand for everything. And when you stand for everything, you stand for nothing. There's this whole notion, if I could strike this word from every website of every accountant, we are a full service firm, blah, 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 blah. Full service means nothing. It means nothing to a customer. Well, are you going to do my dry cleaning for me? Well, no. You're going to cook dinners? No, that's not full. Well, what's full service? We're going to do taxes and all of this stuff. Oh, so you're going to do mergers and acquisitions for me? Well, yeah, we'll do that. That's but when was the last time you did a merger and acquisition? Well, 12 years ago. Do care. You don't have a competency in that. What are you doing? So I'm on a soapbox here, guys. You got me. I'm going to have to double down on the blood pressure meds tonight.
Okay. So we've only got a few minutes left with you. I think we would be remiss if we didn't start talking about timesheets.
Oh, now you bring up timesheets now.
It's a hard pivot there, Chris.
I'm just trying to pivot a little bit.
Yeah.
All right. So here, I'll tee this one up for you.
The cancer of the profession.
Yeah.
Next, they are the cancer of the profession.
I'll tell you what, Ed, there's no way that you remember this, but the first time that we met was in 2019 at the 40 Under 40 think tank. And
okay.
First thing
I remember the event. I don't remember us. Okay.
You absolutely don't. There's no way. The first thing you said to me, can you guess what that was?
No.
I don't even know if you introduced yourself, but what you said was, did you throw away your timesheets yet?
Oh, okay.
So with that said, how do you measure efficiency in a firm if you don't have timesheets?
All right. I got to go nuclear on you now. We're going nuclear. All right. I'm going to start with the two of you, and then your listening audience, watching audience can play along. I don't know if you're watching this subsequently or listening to it, but just work through me on this. All right. How many who are listening here, including you, Jeremy, and you, Chris, have ever filled out a timesheet? Hands up. Put your hands up if you filled out. Keep them in the air. Keep them in the air. How many of you have ever not put exactly what really happened on the timesheet, either too few hours or too many hours?
And for the record, all of our hands were up for both of those questions.
Yeah, everybody.
Right. Okay. Because nobody puts on the timesheet what actually happened. They put on the timesheet what they think should have happened, or what their boss thinks should have happened, or what the customer or client thinks should have happened.
It's client in that situation.
Yeah, it's client in that situation, right? So please, what is it? You're not measuring actual anything. I mean, it's optimal. It's optimal cost. At best, it's optimal cost. And then there are people, well, we don't have that problem around here. And I'm like, you are in denial. Oh, my people, they fill out their timesheets 100% accurately. Nobody takes work home with them on the weekends and just and does stuff and then doesn't put it on the timesheet. That never happens in your firm. Well, and then once they admit that it does, well, okay, so now how are you judging efficiency of anyone? How are you judging what's going to happen in the future when the next time? Well, we need this timesheet because we need to know what's going to, like, when the next time a job like this comes in, we'll be able to say how much it actually took us. No, you won't, because people are not putting down on the timesheet what actually happened.
It's an opinion.
Yeah, it's like all costs. Costs are opinions.
That's Dr. Lee.
Dr. Lee, yeah. I mean, this is just an opinion. And to think that it's actual anything is nuts. And I was like, well, no, because what they do is they're immoral and unethical, because they make people like the three of us and those who are listening do things it's unethical to fill out the timesheet incorrectly. It's unethical. Period.
I
End of
learned that
story.
when I was 16, working at a grocery store, and I had to clock in and clock out. And then I realized one day that if I clocked in 7 minutes late, I still got credit for that whole quarter hour. So I was 7 minutes late to work every day, and I was clocking out 7 minutes early. So I was getting paid for a quarter hour that I just wasn't there, right? And it's like, in the big scheme of things, 7 minutes one way or the other doesn't affect me any. But then you think about it, and if they've got 20 employees on the front end, and they've got 400 stores across the country, and every employee's cutting off a quarter hour every shift every day, like, this would start to rack up. But the incentive on an individual level pushes you into that kind of immoral, unethical behavior that, eventually downstream will have serious implications for the business as a whole.
Right. And the argument is that, well, if we would put too few hours on, why? Because, well, we don't want to take a write-off in the end.
Yeah. So what is the right way to measure firm efficiency?
You don't measure efficiency, you measure effectiveness. right? You measure effectiveness. And the difference, but here's efficiency. Effectiveness is like, efficiency is doing the thing right. Effectiveness is doing the right thing. And Peter Drucker said there's nothing so wasteful as doing that which is ineffective efficiently. In fact, if you think about it, if you're doing something that's ineffective more efficiently, you're making it bad faster. Good for you. Right? All right. So what we want to do is we want to measure effectiveness. And here's an effectiveness measure. On-time performance. If we look at a list of potential tasks that every individual has to do, and we say this task is due on the 17th, this task is due and we list out all of the tasks as to when the individualized tasks are due. What I can then look at as a professional is to say, what percentage of the tasks did Jeremy or Chris or Ed do on time? Did they meet the deadline? And then if somebody is falling off that, is not meeting the deadlines, then we can have a conversation as to why. Are they overloaded with work? Do they not understand the problem properly? Do they not have the proper education in order to be able to do this stuff? Because then we can have real conversations that actually help people get better and get the knowledge set that they need in order to be able to solve those problems. So now, could you have people who lie on that? Yeah, I guess so. I guess you could, and we as humans are scamps. I mean, this is from time immemorial, right, Jeremy? But once we learn the system, we figure our way around the system. I mean, this is what I'm listening to this great book on audio right now called Cheats. And it's this guy about going through all of the history of cheating in sports. It's absolutely hysterical. You know, the number of people who got in the marathon that have taken the train or ridden buses or something. It's absolutely unbelievable, Yeah, but this is the problem: is that we have to think about these things in a different way. And ultimately, the real measure is not even something that's internally based, which is this, but it's really more something like customer satisfaction, customer loyalty, net promoter score. You know, what are your customers saying about you and as individuals? And, for those that, I need the management reports, utilization and all that stuff. First, I pointed out to you that they're all lies, but I often said this: if I take away your timesheet reports, take away your utilization reports, force you not to use them for 6 months, could you tell me still who the good people are or not?
Yeah, absolutely.
Yeah.
Of course you could. Because if it is knowledge work, like we talked about earlier, knowledge work cannot be measured. It can only be judged. Probably by another knowledge worker or by a customer. The customer is the ultimate arbiter of was the work done in a sufficient manner.
Yeah.
So there you go. Anything else you want to bring up? Peace in Israel? Do you want to bring up loan forgiveness? If you really got me,
yeah. Let's do all of those things. We'll have you back. So last one. I can't believe that anybody listening to this would be new to Soul of Enterprise. But beside that, where can everybody find you, and where are you besides every accounting conference ever and the most the most prolific podcast of all time?
Because my parents were really into differentiation, I am the only Ed Kless in the world.
How about that?
So, if you just Google Ed Kless, you will find me. I promise you that I will come up. But yes, Soul of Enterprise is really the place that I like to push people, mostly because it accomplishes all the things. As you guys know, I work for Sage. That show is sponsored by Sage. It has been for the last 8 years. So I really appreciate what they have been able to do for me and for Ron and getting these ideas out there, which I think is of super importance. But so the Soul of Enterprise, I do have a website, edkless.com, that you can go to, or I infrequently post stuff out there, but yep, the stuff is out there. That's really the place to go.
Awesome. Can I take 1 minute and ask you a Sage specific question?
Of course.
So at Scaling New Heights, what you said was some crazy percentage of transactions that go through Sage are automated, never get touched.
Mm-hmm.
It was like 80%, something like that.
So and thanks for asking this question. So the number that I know for sure is that it was that 4 years ago, because this was the first conference that I went to after Sage had acquired Sage Intacct. Aaron Harris said it was 70%. And I have tested this internally. I haven't spoken to Aaron since, But my guess is that it has only increased, and that right now it's running around 80. And when I bring that number up to others internally, that seems to be that sounds about right.
Crazy. So for us automation nerds, how is that possible? What are the components that make that possible?
It's bank feeds, bank transactions. And I guess it also depends on what you mean by human touch. Like, is an American Express transaction touched by a human? Well, I guess when I hand the card over to the person at the restaurant or wherever I'm buying that, I guess I've done. But in other words, once I've done that, once that transaction has happened, everything else happens automatically. It filters through the bank feed into the right account, etc. And I think it's really more about not being touched in the sense of it doesn't have to be looked at by somebody and say, here's where this needs to go from a general ledger point of view.
That's awesome.
Right. Yep. So
cool. Jeremy, do you want to take us out?
Yeah, like I said at the top of the show, Ed, this has been fantastic. Thank you so much for your time and coming on to our little upstart podcast here.
No, not thank me for my don't thank me for my time.
For your knowledge.
Don't thank me for my time. Thank you for my knowledge, my insight, all of this stuff, but not my time.
That's right. It's hard to break those linguistic habits, isn't it? Yeah,
it is, man. It's hard.
You got to make a career out of it, right? Absolutely.
Yeah, that's right.
Good deal. Well, thank you so much. And thank you to those listening and or watching. We appreciate your support as always. Chris, thanks for being here and have a good one. Hey, it's Jeremy. Thanks for watching the CPA Advisory Show here on YouTube. If you enjoyed this episode, please subscribe, like, and leave us a comment. We'll probably read your comment on the air. Be sure to follow us on Twitter at CPA Advisory Show. And if you have an idea for a topic or guest you'd like to see, email us at host@cpaadvisoryshow.com. Thanks for watching, and we'll see you next time.